Welcome, everybody, to the Master Series intro of the next class on iron condors. Answering a few questions here. But we're talking about the volatile market today on May 10th with the deadline at 12:01 last night on the tariff talks. And at 1 o'clock Central, we've already seen the market rally 45, 46 points. Unbelievable. And everybody is distressed here. Good from the speculative part of the portfolio, but from the income part, a little challenging. It's not often, but we have it. Agree that there's like an earnings effect on the market. Do you agree that this tariff and China swinging the market back and forth? You've got the weekend risk coming, a lot of suspense, and I don't know any more than you guys what's going to happen, but I can tell you this: if you think that China and the United States, with their long history of distrust, is going to settle this thing this weekend, I've got some swampland somewhere. I don't have it yet. I'm going to buy some swampland and I'll sell it to you, right? I think this is something that's going to take a while to unfold. I think we're going to have some more volatility into next week. But on the other hand, right, let me take that back. I don't know if we'll see again VIX 20 next week, even if we go down more, just because we're getting a little more used to this China stuff. A lot of more information's coming out. Interesting thing today, right, as Dino says, their leader likes cherry pie just like our president. That could be, food is always the turning point. But I don't know if you guys were watching the market closely. Let me ask you a question. When SPX was near the lows of the day today at 28.25, so at that point we were down 45 points in the SPX. Does anybody remember how much the VIX was up? Anybody? That was a very interesting thing to me today. Not much, right? Less than a point, right? I think Peter, I think it was closer to 0.5. So if you would tell me on a normal day, hey, Dan, SPX is going to be down 46 points and VIX will be up 0.5, I think you were out late night the night before. Something's wrong, right? There's no way, Jose. So you say, why? Why do you think it was up a little bit? And I'll give you my thoughts. Why do you think, with SPX down 46 points, huge move, why? Just think about it. A couple days ago even, if we had this type of move, VIX was up 3-4 points. So why? So somebody answers, Peter says it was jacked up. Some of the reasons why, some ideas on why the VIX wasn't up much, with SPX getting the snot beat out of it today when it was like down 45 points. Peter says it was jacked up yesterday due to the talks. Dale says the CBOE skew is closer to bottom of range than the top over the last year. Dino says yes, selling puts. Ralph says it's Friday. Here's what I think. What I think is VIX was 20, right? VIX was 20. And a couple things I looked at. VIX was 20, which I consider a pretty high level, right? But let me ask you a question. VIX was 20 coming into today, right? Yesterday, VIX was around 20. The point is, right now as we speak, right? Right now as we speak, How many points are we off the high in the history of the universe? How many points are we off in the SPX? How many points from the high are we? Right? How many points from the high in SPX in the history of the universe since Julius Caesar came to Chicago were 80 points? So if you said to me, hey, Dan, we're 80 points from the high in the history of the universe, and we're at 20 in the VIX, I'd say, what? That's what I'd say. What? You know, are you kidding me? So I just think that a lot of that is, I think Peter and some of you have mentioned that, again, buy the rumor, sell the new. What is that? Buy the news, sell the rumor, whatever they say on that thing. The point is, this whole China thing was like an earnings event on the market. And so now the VIX was pumped up yesterday into this big number. Buy the rumor, sell the news. Thank you, Dino. But it's like this VIX was pumped up into this 12:01 a.m. Friday, right? And all that. So you had this earnings effect on the market. Today, they met. Chinese guy didn't punch Trump in the nose. Trump didn't punch the Chinese guy in the nose. So, okay, they've met, right? They've met, and I think it was, so now the not that this thing is it's far from over, but that's why I think you're seeing the VIX drop 2.25. Again. Does the SPX, just to make it clear, someone said, are we still showing the intro slide? Just so everybody knows, we're still on the opening slide. This is my monologue. Like to Johnny Carson, this is my intro. This is my monologue. We have not got to any slides yet. This is just discussion. So if you look at SPX right now is 2870 unchanged. How many times in the history of Dino's life, right? How many times since Dino was 3 years old as a small boy in Greece did you have days where SPX was unchanged and VIX was down 2 points, right? In the history of civilization, Dino's 66. Since he was 6, a small boy in his bathing suit, swimming effortlessly through the ocean. Not many. Agree? So this was very similar to me an earnings event on the market, which you don't have that often. And that's why the VIX was pumped up yesterday. That's why with the market unchanged, VIX is down $2, period. So I think the volatility, unless something new happens in these whole Chinese things, which they'll probably drag on some more, things should settle. I think the volatilities might settle a little bit, but you're still going to have, for short-term traders, it's a little bumpier, right? Because short-term traders, you're affected by the price move, and when you start getting 45 to 50-point ranges in the market, that's a lot. All right. That's just some general thoughts on the market. My opinion, that's all it is. And anybody else, any thoughts? All right, let's jump into a couple slides here. Yeah, but and let me just answer one more question. Lewis says, Iron Condors placed yesterday in June expiration, IWM made 29% profits today. Yeah, but again, higher risk, higher reward. You're coming in yesterday, volatilities are up, and today the volatilities came down, but there was risk, right? Bernard made good money, but at the lows of the day today, Bernard was outside in the backyard saying, he was like Dorothy of Wizard of Oz. I wish I was back in Kansas. Oh, I wish I was back in Kansas. Oh, I wish I was back in Kansas, right? So it's risk. All right, so we're going to talk about the Masters Class short-term Condors. So as we jump in here, this is for educational purposes today. And as always, we've been starting this Masters series, which is very exciting. They've been some of our most popular and successful classes because in this Masters series, what we're doing is taking some of the more successful methodologies in Sheridan Mentoring over the last 15 years or so and sharing them with folk, but we're also, in terms of becoming a craftsman, we're just focusing on one methodology, one thing for 3 weeks and trying to really, really get at it so you can be more of a craftsman, right? And we're not trying, sometimes I've done butterfly classes and covered 7 different butterflies or iron condors, covering different iron condors or different durations. We're sticking with one methodology, and we're really going to work at the nooks and crannies and all that stuff for 3 weeks because most of you have tried many different things, but you'd just be happy if you can get consistent with one thing. And so that's the approach we're taking with the Masters series is just take one thing and work it. So 2 of my favorite characters in the world, the famous Kung Fu and Master Po, right? Does any of you out there have eyes like Master Po? Anybody? Master Po has the best eyes, right? But it's this craft thing, and this is the inspiration for the Master series. The famous David Carradine. Is David Carradine still alive? I do not know. But I love the old Kung Fu. John Schenkel just broke my heart and told me, you could have waited till after the show, Johnny. Johnny, during the seminar, had to break that bad news to me that David Carradine is not alive. Is Master Po alive, Johnny? I think Master Po was, if Master Po is alive, he'd be about 130, right? Anyways, so the 3-week class schedule, we're going to be doing short-term iron condors. And just so you know where I'm going with this Master series, at least today, what I'm thinking, we'll go, the 3rd Master series will be on iron condors, 3 weeks. And they go Tuesdays and Thursdays at 1 Central. Probably, I'm not saying positively, probably credit spreads will be next, particularly probably put credit spreads. And then, which are like cash secured put alternatives also. And then we'll move I don't know if I'll do one more short term, but then we'll move into some of our bread and butter longer duration trades, like 45 days in some of them, and get a good balance. So this is the class schedule. We'll be going Tuesdays and Thursdays from end of May to beginning of June, 1 Central. Each class will be about an hour. The cost will be $297. Live class trades every time I do a class. There will be live class trades. If there's 6 classes, the way we usually do it is Jay Bailey or Mark will each do a class, and then I will do 4, usually like that. All classes were archived and recorded at least 6 months. Question and answer to Dan anytime. Doesn't mean I will reply at 3 in the morning, but you'll get a good turnaround. Class times are 1 Central, PowerPoints with each class. And again, we're going to delve into the reason we do live trades is we want to go through this to show you practically how to do this, how to adjust these things, when to put them on, why to put them on, give a plan. Anyways, so that's the next one. And so we're just going to talk a little bit right now. I made these slides an hour ago. You can see how volatile it is. Well, we're not too far off it. SPX was at 28.58, down 12. You can see that there we're a little bit higher. We're 28.64. But let's walk through a few things. So when I looked at it, SPX is 28.58, down 12. I'm just looking at, you can use any brokerage firm. This is a price chart from Thinkorswim. And so you can see the price chart on this window here. You see the price chart, and it also has the green line. That's the 200-day moving average. You have the implied volatility, and that's basically the same as the VIX. So when I look, the VIX is around 18 ATR, and I'm using this. You can see these little 8-day Wilders, just an 8-day, and average true range takes the distance between the high and the low each day. So really, you can see here as the candles, like when the market's going down hard and you see these bigger price candles for the day here, you'll see the ATR during that period will be going up, right? And as the market stabilizes, even if we're going up, if the candles or price ranges for the day are smaller, you'll see the ATR move lower. You can see we've had a few bigger candles the last few days, and that's what took up the ATR and which took up the VIX, right? And so when we're doing short-term trades, we give metrics or under what weather conditions we'll do these trades. So we give very specific guidelines on ATR, on implied volatility or VIX, and that's what it is. And so the goal of this is this master's class on calendar or on Iron Condors is going to be to give you enough information that you can go out there and feel confident, at least, as much as you can do in 3 weeks, give you enough guidelines, you can start doing this yourself. And so you can see as the VIX goes up and the ATR goes up, when those candles get bigger and bigger, especially if it goes in one direction, it's a little tougher to manage income trades at that point. Here's a couple examples of Iron Condors. In this short-term Iron Condor class, we'll be focusing more on short-term Iron Condors, but the duration we'll be doing will be about 14 to 16 days. So we'll be meeting on Tuesdays and Thursdays. On Tuesdays, I'll put on a 16-day calendar or Iron Condor, and on Thursdays it'll be let me take that back. Tuesdays, it'll be a 17-day Iron Condor. Thursdays, it'll be a 15-day. And that's what we'll put every Tuesday, a 17-day on, every Thursday, a 15-day, so you get that repetition and you can see it. And so, what we're basically looking at is, if I look at on Thursday, 2 weeks from the upcoming Friday. So we're going to give you a very consistent methodology, a very disciplined way of looking at this. And so here's an example. I'll get to questions in a second. Here's an example of an Iron Condor I took, within the last hour when SPX is at 28.58. I went into May 24 expiration, which is 14 days out, 2 weeks from today. And I sold the May 24 29.50s. This is an expiration graph. So I'm looking at Thinkorswim, TD Ameritrade, and you guys can use whatever. And this is the expiration graph. How we'll look in 14 days, 2 weeks from Friday. And again, an Iron Condor, just for those of you, and I'll be using, again, we're using one methodology, Iron Condors, calls and puts. Is there anybody here who's not that familiar with what an Iron Condor is? Is there anybody here who might say, Dan, I'm not that familiar with what an Iron Condor is? Anybody? It's okay. We've all been there. But an Iron Condor, you're selling a out-of-the-money call and an out-of-the-money put. That's the guts. That's the gist of an Iron Condor. And really, that's all I really am interested in, selling the out-of-the-money call and put. And we're selling decaying assets, so the business model is our edge is decay, and then by selling them out of the money, we hope to get probabilities in our favor. And that's the advantage of an iron condor over a iron butterfly, is that you're selling more out of the money versus at the money. There's pluses and minuses of both. But the problem is, the main reason we don't want to just sell an out of the money call and put in SPX is because you'll have to put up your kids, your wife, and half your neighbors as collateral, right? The margin will be through the roof, the capital that you have to put up. And so because of that, we go, in this case, we're buying hedges 10 points further out of the money in the calls and puts. And again, I'll get the questions in a second. So in this case, if I sell the 29.50 calls, and that's up about 90 points on the upside, and this is for a 14-day trade. And if I sell the 27.45 puts, it's about 113 points out of the money on the downside. So if I do that 14-day trade, you get position Greeks close to zero, right? And to me, close to zero means if I can be -1 or +1 deltas, that's pretty close to zero. So this is the expiration graph, and this is called the T+0 graph, what your graph looks like today. And over the next 14 days, this purple line will morph into the green line. That's how it works. So you can see you're not up much money when you first put it on, but over time as you get decay, it'll morph into the expiration graph. And so if you do this today, when I looked at this, because, and again, what's the advantage of doing an iron condor when the volatility is higher? It's usually not in the credit. You get a little more credit when the VIX is 17 or 18 versus 11, but the real difference is the distance in your short call and put. If VIX were 11 instead of close to 18, instead of getting 90 days out of the money or 90 points out of the money or 113 points out of the money on the put side for a 14-day iron condor, you might get half that, right? So what's a big benefit of doing an iron condor when the volatilities are higher? You get more room. But it's not like necessarily a warm blanket when you're camping, because even though you're getting a lot of room, the stinking market's moving around, right? AKA in the morning today, right? So if your credit is 250 and you're doing 10 wide spreads, you have $1,000 of risk less your credit of 250. For one contract, it costs you $750. And in baby SPX, which would be SPY, you can do cheaper. So this is a 10 wide spread, and these are your Greeks. You're about 1 delta short. Your gamma, which again, delta and gamma refer to price risk, and gamma is telling you how your deltas are going to change as the price moves. And as you go up higher, you'll get shorter deltas. As you go down, you get longer deltas. It's a 14-day trade. Your theta is about 16. It's a theoretical number of how many dollars theoretically would you expect to make a day in time decay. And then Vega is just saying if the volatility of each of my 4 options were to go down uniformly a point or up uniformly a point, if we go down a point, we'd make $33. If we go up a point, we'd lose $33. Now, again, these are theoretical numbers, these Greeks. It doesn't always work that way, right? Volatility doesn't usually go down exactly the same. So that's a 10-day iron condor. Let me get a few questions here, and then we'll go to another example. question says, Dan, you once suggested a VIX level where you suggested not to trade. What is that VIX level? Well, I don't know if it's where I wouldn't trade, but usually we have some guidelines, but one of them is when VIX goes over 18, we get a little more careful with some of these things, and we have a lot of other indicators we look at, which we'll share during the class, but VIX 18 is something we look at. Why not a 9-day iron condor? You could do a 9-day, just trying to give a little, if I had to pick one methodology that I like, the 15-day just gives a little more, 15-day just gives a little more, let me draw a picture of this. You can see one of the problems with short-term trades is the steepness of the T+0 curve. It's like a sledding hill in Chicago, right, how it goes down. If you look at a 9-day or an 8-day versus a 14-day, it would be even, maybe just a little bit steeper, kind of a little more like that. So the biggest difference between a 14-day and 9, not that there's many days, there's only 5 days difference, just gives you a little bit more, it moves a little bit slower against to give yourself just a little more time, but nothing's wrong with a 9-day. We're just choosing for this class. That's what, as I talked to the other mentors with me, that's what we agreed if we, for one methodology, probably the 14, 15-day iron, or 15, 17-day iron condor. Oswald says, in this program, we use only SPX with 10 width. That will be the main thing we'll be doing is SPX with 10 width. We'll talk about other widths. We'll talk about why we do 10 width. We'll mention other products that we look at. But when you're in a 3-week class and you're trying to help people get good at one strategy, the more you focus on one thing, the better it is. Again, David Carradine and Master Po, they worked on karate. They didn't work on cooking. They didn't work on opera singing. They worked on karate. And David Po or David Carradine got really good. So we will share other vehicles we look at, but we like SPX the best, and that's what we deal with. All right. Dino says, I have done short-term iron condor, so the shorter durations work better and lower volatility, which is correct. And again, I think with these short-term trades, it's creating a playing field where you will do these and then creating an intentional plan where you would, what you would do if it goes against you. Generally, lower volatilities are better, but again, you need to learn to drive a car in the snow, in the rain, and whatever, and that's kind of what we're trying to help. So every meeting, do we have a new position in iron condor? Yes. Another question says, are adjustments quicker with an iron condor versus a butterfly? Are adjustments quicker with an iron condor versus a butterfly? It all depends on which kind of iron condor and which butterfly, but I'd say maybe a little quicker adjustments with the butterfly. How long do you expect to stay in the 10-day iron condor? We'll go over that more, but usually not long, right? Not long at all. And we'll give specific guidelines on that, but we don't stay anywhere near expiration. All right. So another example of an iron condor, you could do it 5-wide, right? So you can do it 5-wide if someone, instead of putting up capital of 750, you could put capital of 375. So you could do smaller. But I think there's benefits of doing 5 wide, if the volatilities, depending on the implied volatilities, the skews, sometimes you may do a 5 wide or a 20 wide, right? I mean, let's think about it. If you're doing, you want to utilize, depending on the capital, you could do, 120 wide or 210 wide or 3 or 4 5 wide, and we'll go over what would make me look at a 20, what are the advantages of a 20 wide, 10 wide, and 5, but for the class, we'll probably do 10 wide. Time frame we'll be looking at is 15 to 17 days. Again, on Thursdays, we'll put on a 17-day. On Fridays, we'll put on Tuesdays, we'll put a 17-day. On Thursdays, we'll put a 15-day. So here's about half the price. The same options we're selling, we're just buying our hedges 5 points away. So this particular iron condor would be $1.25 credit, which is just half the $2.50 of the 10 wide, and the margin is $3.75. So cheaper, if someone maybe wants to play with less capital, you can go 5 wide, and someone could do 20 wide, right? So those are there's different widths, and we'll get into. And again, over the 3 weeks, the goal is to get into the nooks and crannies. How many people have done a live iron condor? How many people have done live iron condors? Many of you. And what we're trying to get at here is, again, a craftsman, we're really focusing for these 3 weeks on what's important, right? What's the proper way to set these things up? When do we play? When don't we play with indicators? What's our profit target and max loss? When do we adjust? How do we adjust? What's the best adjustment? How many adjustments? All these little details, right? And try to give you enough so that you can go out and have enough information and have seen. We'll probably do 5 or 6 live trades during this 3-week class, practically how we go through them, right? And, and the nice thing is no matter what the conditions are when we do these during the 3 weeks, I'm putting on trades, right? Because I want to show you how we maneuver. Yesterday in our master's calendar class, right, volatilities were high. And I normally wouldn't do them when they're high, but I put 2 calendars on yesterday during class because I wanted to go through it and just, hey, you're going to have to drive the car in 15 inches of snow sometimes. So to experience it, and it was a doozy today, right? We ended up breaking even on one of them and, maybe lost 1.5% on one just because we were down almost on like a 7-day calendar. SPX was down 50 points today, right? But with the plan, we broke even, right? And so, again, not that it happens on every trade, but, intentional plans are very good. Anyways, so that's just a quick intro for the new class, which will be starting, as I said. Today is Friday, May 10th, and we'll be starting a week from Tuesday, May 21. May 21. And so if you have any questions in the meantime on the class, on the new master's class on Iron Condors coming, send me an email at dan@sheridanmentoring.com. Again, if you're familiar with credit spreads, if you've traded credit spreads, this could be a good class for you because this is just combining 2 credit spreads, right? And we're going to really look under the hood of the car and work on this. You can register for the class. We should have today or tomorrow some registration for whenever Johnny Schenkel gets that ready. I don't know, maybe he can put when that'll be ready, but you'll be able to come to the front page of Sheridan Mentoring and sign up for that. Again, it'll be $297 for 3 weeks. So be minimum an hour. A lot of times I'll go over. So you probably get 6 to 8 hours of live instruction, very practical. You can ask unlimited questions, even after the class. It'll be up there, and it should be do I get into adjustments? As Sylvester Stallone, my close friend, says, absolutely. Will we get into adjustments, risk management, everything? No questions off base, and we'll be putting these trades on. Again, it'll be extremely, and I say that with a capital E, practical, right? Everything will be, we're going to do it 6 times. It's like if you came over to my house and we're going to build a deck together, we're going to build 6 decks. Here we're going to do this 6 times, and we'll go from there. All right, and any other questions, you could send me an email. Be happy to answer anything there. Hope you have a great weekend as we're down 170, and we'll go from there. So thanks, everybody, for coming, and we'll see you later.